What's up everybody, Tom here with another video. Today we'll be talking about the latest stock market news that's moving the markets, along with our technical analysis levels for the S&P 500, Nasdaq, dollar index, gold, Bitcoin, and oil. This week has been ups and downs in all sorts of different instruments, but are we just getting ready now for the next big move? Let's take a look together at what the stock market is telling us from the technical levels. Stay tuned. So as all of us know, one of the best ways to get a bit of an idea on what might be happening in the future is by taking a look at the last 24 hours on the stock markets. And at this stage, we have pretty large moves and rotations back into our old favorites, the FANG stocks, Microsoft, Apple, Google, Facebook, and Amazon all up today. And we'll be taking a look at the technical analysis on the Nasdaq to just show you why that hit a perfect level for bullish intentions. If we're talking about the general market overall, Nasdaq is leading currently with 2.29%, and the S&P 500 coming along a little bit due to the weighting, and then of course Dow Jones underperforming today with a 0.17%. So when we bring up a stock market 5-day sector analysis chart, we can see things have changed quite dramatically since Monday. Energy, one of the worst performing sectors, well, it is the worst performing sector in the stock market, was out to the gates very, very strong and is still holding a very nice gain. Financials, also another one that's been weak recently and very nice gain. And we continue to think that if the news remains positive in the markets, the next 3 to 6 months should be quite positive for these beaten down sectors. They'll have the ebbs and flows, but just remember, if we are turning kind of the curve here, then these sectors generally outperform during crisis periods when it comes to the recovery phase. We've got industrials as well, kind of moving down a little bit after the initial spike. And of course, our good old favorite technology starting to come back up after it wasn't strong out of the gate the other day. It was the one where everyone was rotating out, and now they're thinking about it logically and going back into some of those stocks. If we think about today's movements, yes, we have big movements in technology, and energy and financials are some of the weakest, followed by also some pretty big moves on the materials sector. Materials down around 1.84% after their initial spike. So let's talk about why this is. Well, here's one of the things that's just happening. Of course, vaccine. CEO unloading $5.6 million of stock all of a sudden. Well, that's not the best, is it? And I think a lot of this is due to some of the drawbacks of this potential vaccine. It's not always as good as it seems, and we're seeing the market have heavy reactions to trap us, the retail trader, and then of course reverse those decisions. When we talk about what Wall Street is doing to us all, this is where things get interesting. So Nasdaq, of course, peaking up as Wall Street pivots back into tech after it became a bit of a sell-off. And if we have a look at the CBOE daily market statistics for the put-call ratio, why is that? It's very hard for a market to sell off, guys, when we have a 2.26 reading on the S&P 500 put-call ratio. This is a big major reading that we always look at. And when you have a declining market, and then at the same time, at the bottom down here, you have an extreme amount of puts opened, then do you think that the market is going to go continuously down if most of those puts are opened by retail traders? It's very unlikely to do so. Generally, what Wall Street will do is it will push the market up slightly. That will lead to people closing their orders or waiting till they expire, because mostly retail traders like you and I buy short-dated calls and puts, and then of course, then it could go down to its continuation. So just remember, when a put-call ratio is this high, it's why we check these figures. It's what Wall Street is doing to us that's the very important fact. We've also got Bill Ackman's doing another big short kind of trade. Now, you know that he had that famous 27 million into 2.6 billion trade, and now he's trying it again. Now, his main reason is he sees the vaccine news as actually bearish for the next few months because it was likely to make people more careless about wearing masks and less likely to fear the virus. So this is a very interesting kind of play here from Ackman. Again, it's just like what most people do. If you're really rich, why not throw a few Hail Marys out there when you think the odds are worthwhile? And that's really what he's doing here. So let's get stuck into this technical analysis, guys. Let's have a look at what's going on in the markets right now. Well, dollar index showing strength, movement into dollar again after, of course, that strong decline since the election. What's happened here? Well, I want to just really point out one thing that's really interesting and happens all the time. Market moves up. We have market structure right around that 20 exponential moving average. And then as it moves through, day traders kind of start to begin buying the pressure here on the dollar index. Now, the most important thing is just remember that what this market structure here is doing when it starts coiling is it's resetting all of the indicators. A lot of people don't think about it that way. A big move is usually followed by consolidation, and in that consolidation, all the bears in this case will be getting involved trying to short the dollar down at this level. The thing is that the market is saying, no, we're not going down. What we're going to do is reset all of the indicators. So for now, dollar index, if we have a look at where it's at, it's gotten above that 93 zone. It's probably going to find the 50 exponential and 20 exponential as dynamic support, and then potentially continue to move up towards the 93.50. Now, if that's going to occur, what's going to happen in the stock market? If dollar index continues to strengthen, generally that has a negative connotation to the stock market, but we'll talk about that more throughout the video. Let's have a look at the VIX. The volatility index hasn't closed yet, but for the first time, it's putting pressure on the daily here to the downside underneath 25. Now, if volatility drops or the VIX drops, that generally leads to stability in the markets. Where's the next kind of move? Down to the 20. So down to the 20, which we have not seen in some time. In fact, since August, September. Now, we've kind of maintained on this channel that when the VIX goes underneath 20, we're in a normalized market with normal kind of fear and, of course, greed parameters. When we're above 20, anything can happen. So at this stage, we're still above 20, but interesting to point out that 25 is almost being broken down and closed against right now in the markets. Where things get even more interesting though, guys, is gold. Now, gold is always going to be one of those things that people look at to hedge uncertainty and, of course, to also move into during, of course, crisis periods. Now, gold is testing an incredibly important support level. We've talked about this before. 1850 was tested during the big sell-off off the vaccine news, and then we saw the market continue down, move up a little, and now it's still finding some bearish intentions. Now remember, if dollar index continues to bull up, as in US dollar strengthens, what's going to happen to gold? Well, gold is going to weaken, and if it breaks below this area here, this 1850, and closes, what is going to happen? Well, let's take a look at this on a daily chart here. There is very little price action structure on the left-hand side before the 1750 area. We've mentioned this a few times on the channel, and quite a few of you agree that there's not much room here. So the market could feasibly come down, close below, retest the 1850 from the bottom down, and then of course continue to move down to maybe the 200 simple moving average here on the daily, or the 1750 level. It could be a very large move, at least $50 chunks you would expect in gold, from 1850 to 1800 to potentially 1750. And I think that's a very large move and something that's very possible should the market breach this very key support line. If we go down and have a look at the 4 hour, you can see again why this level is so important. Let's think, if we're a bull here on gold, what do we need to see happen? Well, we need to see this level hold twice. And one of the key things that's going to happen now is if it moves up and closes above this line up here, above this zone, not only will that be getting through a 20 exponential moving average on the 4 hour, but this would be a double bottom pattern, usually the end of a downtrend and the start of course, a new uptrend. So I think gold's at a pivotal area for big news in terms of big moves each way. It's not over yet for the gold bulls. I mean, of course, it could still bull even if it goes down to these levels down here. But this particular pattern that could be setting up both ways, very good opportunities. And that's what you're looking for as a trader, good opportunities to both sides. Silver continuing kind of hovering around the different zones. Silver is like a hybrid of gold and copper. And therefore, in this case, it is holding, but it's not really doing anything particularly good. We still really remain long term or medium long bullish on silver. But at this stage, it just needs to get above this 2450, break those previous highs, get through all these exponential moving averages here on the 4-hour, and then we can continuously see bullish movement. But if it goes underneath this little trend line here, I'm starting to think we might see bearish movement back to 23 and possibly even lower. Watch the dollar index and gold as a good precursor to what silver might be doing. Before we get into the S&P 500 analysis, let's have a quick look here at US oil. So oil got through the 41.25. It's now returned back to this zone. Look at this daily, very ominous, bad looking candle. For many people, this is an incredibly bearish signal. This is, of course, a shooting star, or some people will know it as a pin bar. Now, if we go to the 4-hour, notice how it's now testing this zone. It's testing the previous 1, 2, 3 resistance as support. Now, it's come down a little bit faster than we'd hoped, and we would usually want the 20 exponential moving average to be hitting at the same area. But I also want to bring up another kind of interesting area and an interesting point overall. Usually markets like to move in kind of unison with each other. So if we took this move down here and we considered this length, and then we considered that length happening again, the lengths are almost identical in size. So what does this mean about what might happen with the pullback? Well, we may see the pullback again identical in size as the first and second move. Now, what would that do? It would push us down to about 40.60 and where the 20 exponential moving average is. So while I think oil has changed in terms of bullish sentiment here, there clearly is some bullish sentiment off this vaccine news. Possibly oil goes even a little bit further in and hits the 20 based on just the analysis of what's happened before, happening again on the 2 big moves. Always consider doing these kind of proofs when you're looking at TA in the markets. Oil for now, big breakout above. And of course, if you do see a break above that daily and the daily does close bearish like this, you know there's going to be a triggering of huge amounts of stop losses here and therefore bullish intentions from Wall Street and all the other large, big traders. All right, so let's just talk about trading on US 100 Nasdaq recently or investing on this particular pair. Let's have a look at this level first. This level, I'm sure a few people picked it up. What a great zone, guys. What a great zone for all of us to be looking at yesterday and just in general looking at when you're talking about the Nasdaq. This level, the 11.6 area, was previous resistance, heaps of times support, and then a 200 simple moving average on the 4-hour and support again. So there's no doubt why after that initial kind of overreaction on the Nasdaq, we've seen pick up now right to the next level, which is of course around this previous little support that happened, and now it could of course become resistance. So the 11.6 is clearly a great area for you to have alerts in the market, and you can see why straight away. Another thing people ask me all the time is, how do you get into these type of trades? How do you get into the zones? Well, one of the best things here is you're basically seeing accumulation on the smaller time frames. And when that accumulation breaks out and closes above, when you start to see these little bits of accumulation above that zone, that's even stronger to the bull side, stronger to your direction. And in this case, it's a very, very nice little trade setup. So look for accumulation, look for double bottoms, look for, of course, lightning bolts, what we talk about a lot on this channel all the time. So what's next for this particular pair? Well, it could stop here. It could stop right where the previous support of 11.9 was. It may go to 12,000 first and then have a little bit of a sell-off. If you're wondering whether we're going into the next kind of bull phase right now, there's still a lot of uncertainty in the markets. We now move to stimulus. We now move to, of course, Fed Chair Powell speaking later on today. These are the types of things that become very important when it comes to analyzing the markets. We need to know what the market is expecting next, and it wants stimulus. It will want that before, of course, Thanksgiving, Christmas, ideally. We'll take a look at the US 500 quickly. What's been going on there? Very similar to the Dow, except that it came down to around that 35.20 zone, hit the 20 exponential moving average and bounced off it. Kind of expected it would do so, at least the first time. And this is just based off the initial sell-off that was pretty crazy after that bullish move and the 20 exponential on the 4-hour being reached. If we think about what's next for the S&P 500, well, we're still at an indecision point. And what I mean by that is that we are looking bullish right now off this level. We did have that big sell-off candle and we still have not closed the week. So the week is going to be the key area here. Notice how the week's looking very rejection at this stage, a very big rejection. We've never closed a weekly above this 35.12. We still may not. If it sells off on the Friday open into Friday session and Thursday session, all of a sudden we're back under here and things are starting to look very bearish. So it's a difficult kind of day to trade because of that. We've got a lot of consolidation, a lot of trapping from Wall Street, and hopefully once we see Fed Chair Powell speaking, we will have the next kind of move, or of course something like stimulus will come out and give us that area. In the meantime though, I'd be looking at specific stocks also for opportunity. Netflix is one we've talked about several times. Look at this opportunity. Heaps of supports. Support. I don't know how many more we want. And then all of a sudden it hits that level, boom, buyers come in. And this happens all the time. We saw it on AMD, we saw it on so many stocks recently. Always great key levels to be looking at. Last but not least, Bitcoin. Bitcoin has been moving up quite steadily, and I've got this trapped kind of in an ascending triangle zone right now. It seems very similar in terms of pattern as what we saw in gold before its big move and breakout. Now, the good thing about ascending triangles is if we believe this is an ascending triangle, what have we not had yet? A 4-hour close above this 15,800 area. It hit 16K again before and sold off. Will it now close above this zone and trigger further buying pressure? Well, it certainly could. Now, if it fails and it gets through this trend line, that's going to signal quite a lot of sell-off pressure. The good thing with Bitcoin is it trades like human basic psychology, like us in terms of weak hands, strong hands, that kind of movement. These are the ways that you need to understand instruments. If we understand instruments together, Bitcoin's traded by mostly retail traders, it is, and that's how it really is, there's a few whales and those kind of things going in. We can understand that the way this moves is based on classic human traits. When the FOMO is on, everyone's jumping on. When people lose faith, everyone jumps out and it really depresses the asset. So think of Bitcoin like really your normal human emotions, and it will be easier to trade. You'd be surprised. Look at the price action and then consider the levels. We hope you enjoyed this video today. If you did, of course, remember to subscribe and hit that like button, and we'll see you in the next video talking about what's happening on the stock markets. Bye for now, stay safe, and of course, make as much money as humanly possible.